Hello everybody, this is AT from ForexPreparation.com. Today is Monday the 25th of February 2008, and we will be looking at the US dollar Swiss franc as last week what we were talking about. What I'm noticing right now is we have a divergence between the price chart and the relative strength indicator, which is the first step in order to make our bullish bias. And what's actually happened last week and last Friday was last Thursday and Friday was this negative divergence between the price chart and the relative strength indicator, which led to this hectic selling of this currency pair. You can see that it resulted in almost 200 pips gain for the sellers, and right now we're seeing a positive divergence right here on the bottom of the charts between the relative strength indicator and the currency pair, which into more simplistic terms translates into a bullish bias or buying pressure. Okay, so what is good to see on this chart is that you see a close above on the hourly chart, a close above the level of 1.873, and these are around 9-10 pips above the current price action. If you see such a close on the hourly chart, it might be a good idea to buy a small portion of this currency pair with a stop loss order on the level of 1.838 or around these are around 30-35 pips below this level. On the other side, what the other time frames are telling me, or for example the hourly time frame, is right now we are in on the relative strength indicator on the daily chart is trading on the level of 40, which is negative bearish signal, and most probably today's action would be very ranging, and we won't be seeing much buying or selling pressure, and most probably the price would be locked between two close boundaries. If we go to the 8 hours time frame, what is this time frame telling us is pretty much the same thing, and we can see that we have a break below this this support level, which is the level of 1.900. At the same time, the relative strength indicator is trading on the level of 33, which is negative signal, but we might expect the price to climb up to this level of 1.900, and this might result in profit taking from the sellers from last week, which we saw. So again, we might see price returning back to this boundary of 1.904, and if you want, you can if you're willing to put a little sum of money into this currency pair and open a buy position in order to be waiting for this boundary to be reached with a stop loss order on the level of 1.840. So you'll be risking, if you open a buy position right now, around 20 pips, and your gain might be another 40 pips. Okay, so I'm not trading today. This is not my type of risk-reward ratio, and this is just a suggestion for the very impatient traders. But as a whole, the point of trading is not that. You should be very patient and be looking for the right patterns to form in order to start and open a buy or sell position. So pretty much my view today is neutral, and I don't advise that you place any sell or buy orders unless you're willing to be gambling and just risk a very little sum of money. Thank you very much and have a good day.